Workday reported fiscal year 2024 first quarter earnings results that pleased stock market investors. In this video, I'm going to review its latest financial figures. I'm also going to answer the question if it's too late to buy Workday stock. So let's begin. So total revenue increased by 17.4% for Workday to 1.68 billion. Earnings per share was $0.00. I've rarely seen earnings per share be exactly zero. That was an improvement from a loss per share of 41 cents in the same quarter the prior year. Operating cash flow decreased to 277 million. This was down from 440 million in the same quarter the prior year. Now, impressively, the total subscription revenue backlog jumped to 16.7 billion. This was up 32% year over year. What this figure entails is contracts that Workday has signed with clients that it expects to fulfill over the next several quarters and several years. This gives you a nice insight into what Workday's revenue is going to look like over the next several years. The reason it records this as a backlog and not just revenue right now is because of accounting rules. When Workday signs a contract with a client, it doesn't record that as revenue right away. Right? It records it as revenue when it performs that obligation. So if it signs a 3-year contract for $30 million, it spreads out that $30 million over 3 years and records revenue spread out throughout that time. So this figure rising 32% in year over year is a good sign for Workday investors in that the revenue backlog continues to grow. The company has over $6.3 billion in cash and marketable securities. That's especially important now that interest rates have increased substantially. Workday can invest this $6.3 billion and earn roughly 5% depending on where it invests the money, but it can earn relatively close to 5% investing in safe government bonds, and that could bring in a good amount of money to the bottom line because that's all profit. Workday is forecasting revenue growth of 18% for the full year 2024, so it expects the second, third, and fourth quarter to be a little bit better than the first quarter because the first quarter revenue grew at 17.4%. The company expects full year revenue to grow 18%. That means the average for the second, third, and fourth quarter have to be higher than 17.4% so that for the full year it earns 18% revenue growth. Finally, now that we've looked at the company's performance in the last quarter, let's look at the valuation. And I have pulled up on the bottom here the chart of Workday's forward price to earnings ratio of 34.08. It's been around this level for some time now, but that's significantly lower than the peak valuation of over 48 it was trading at over a year ago. Now, I think it's not too late for investors to buy Workday stock. I think it's a good stock to buy right now at these prices. Given its healthy operating cash flow generation, the company is expecting close to 20% revenue growth for the year, and it's got a strong backlog of contracts signed, so you can have a good visualization of what the company's revenue is going to look like over the next couple of years. So if you're interested in Workday stock, I would recommend to buy. It's not too late to buy Workday stock at these prices. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.